Good morning. I'm happy to share with you Biocon's financial results for the first quarter of fiscal FY15 ended 30th June 2014. So let me begin with our key financial highlights for the quarter. Consolidated revenues for the quarter stood at 742 crores. Biopharma sales were relatively flat at rupees 547 crores. And within this segment, the core biopharma revenue was 436 crores. Branded formulations grew 10% year on year to 111 crores. The research services business segment registered a growth of 12%, delivering 172 crores. And what is very important for me to emphasize here is that despite the sort of tepid flat revenue level, consolidated EBITDA was 191 crores, which is a growth of 9.5% year on year. And EBITDA margins were very strong at 26% for the first quarter. Net profit also rose 9.5% year on year to 103 crores, and PAT margins were pretty good at 14%. During this quarter, we also had a 1 crore forex gain. And on the R&D side, at a gross level, our R&D spend for the quarter was 47 crores, of which 16 crores were capitalized, leaving 31 crores to be recognized as R&D expenditure. As we continue to invest in our novel and biosimilars programs, of course, R&D spends are expected to increase significantly on an annualized basis. And as shared with you in the past, we expect our R&D as a percentage of our biopharma sales to be somewhere within 8 to 10%. Now, coming to the sort of other aspects of our quarter in terms of some comments that I wish to make, that this quarter has been challenging for us, largely because we have been impacted by some external factors, largely related to the Middle East, North Africa, because of the geopolitical tensions that remain in those regions. We hope this is temporary. The demand is very strong, but we hope that we will be able to address these markets very soon and bring about corrective action. In any case, we are also looking at other ways of reducing the kind of impact of such external factors in the coming quarters. So largely our business has been impacted by some loss of sales, which we believe is a phasing issue to the Middle East, North Africa, which is a very large market for us. This quarter also has been impacted by the increments, the salary increments that have been reflected this quarter, plus of course the mandatory CSR that we have also reflected in our accounts. But having said that, I think despite all that, I think we've managed to put up a pretty decent performance, and I'm optimistic that we will improve this performance in the quarters ahead. Now, at a segmental level, I would like to say that our small molecules business reported another very stable quarter. So we haven't seen price erosion, and that is why you've seen our margins being sustained at where they are today. The product mix, of course, has been better, which is also a reason why our margins and EBITDA and levels have been well maintained. And our specialty APIs continue to provide an upside in this respect. I think an important announcement I would like to share with you is that we have started filing our own ANDAs, and the first few ANDAs have been filed with the US FDA, which marks our moving up the value chain into finished dosages, which of course is going to be a big revenue driver a few years from now. In terms of biosimilars, the insulins continues to be a strong growth driver for Biocon, and of course the Malaysian facility remains on track in terms of its commissioning, and we hope to basically commission this facility in the second half of this fiscal. And post commissioning, of course, we will then be ready to receive regulatory inspection, and once that is and recombinant proteins, our partnered programs continue to progress, and we expect to have additional programs within this basket entering the clinic this fiscal. As I mentioned, branded formulations registered a 10% year-on-year growth. We have basically focused on our branded formulations business in a very strategic way. We want to be known as a specialty pharma company. So we have done a bit of reorganization in the way we are set up in branded formulations, and we want to therefore focus on brand building and market share, and really focus on this specialty healthcare kind of business. Both our products, Alzumab and Canmab, continue to do well for us, and we believe that we have many products on the anvil to offer going ahead. Novel programs, we continue to have very good discussions, and some of them are pretty advanced in terms of the Itolizumab licensing opportunity. IN 105 continues to remain on track. We have completed some very important clinical trials, early clinical trials, to evaluate certain aspects of the molecule, and this has been done in the US, as you know, because of the inability for us to conduct these trials in India. And most of the other trials are also in various stages of completion. We believe that the first very important set of clinical evaluation trials in the US will be completed by the end of this fiscal, and thereafter I think we move into the next most important phase, which is really now starting to look at pivotal studies and things like that. On the research services front, of course, this business continues to drive growth and value for us. Although the growth is 12%, it is again a phasing issue. But having said that, I think what is important for us to share with you is that we've had the rollover by Bristol Myers Squibb of its long-term contract, and this is a very important signal for Syngene. And we believe that the kind of businesses that we have are going to be extremely important in terms of the future for Syngene, which is really evolving into a very integrated business for Biocon. So in conclusion, I would like to say that our efforts are aimed at further optimizing the product mix and continuing to drive operational efficiencies, which are really paying good dividends in terms of our margins. Moreover, I think I would also like to especially talk about the multiple US FDA inspections we have had in recent times, all of which we have very successfully come out with. And I think this is a very important message, because you know that many Indian companies are today really being challenged with US FDA inspections. But I think the fact that we have successfully completed several US FDA inspections within the group basically is a testimony to the quality systems that we have in our company, which I think is going to be a huge value differentiator for us going forward. So we believe this is going to be a very big competitive advantage for us, having such a good quality system in place. And of course, we are very committed to focusing on the various growth drivers we have within the company, and we will continue to focus on some of these key growth drivers and some of the important events that I've just talked about, especially Malaysia, and I think the future looks very bright for Biocon. So with that, I'd like to stop and take questions.